Welcome to Matters Financial and Geopolitical from a Frontier. As always, thank you for stopping by. Let me start with a reminder. We're hosting our first Mind Speak of the year. Our guest is the UNEP Executive Director, Erik Solheim. This Mind Speak is being done in conjunction with Safaricom, Sanda Ojiambo of Safaricom Foundation. The environment and conservation, I believe, are the big issues for Africa now, and I did a short teaser with Erik a couple of weeks ago before he took off to Davos, and do take a look at that. Erik is also going to speak about the opportunities for entrepreneurs in this space. Sanda is going to speak about Safaricom's experience and how it can be applied to any business of any size. You don't have to be a huge business like Safaricom. Erik Solheim's biography is also on Rich Wrap-Ups. Take a look, it's very interesting. Macro thoughts. Obtsfeld of the IMF. Growth is picking up in Europe and Asia. Improved performance also in the US and Canada and some large emerging markets. The IMF upgraded forecasts for almost every major economy except the United Kingdom and except for South Africa, which they downgraded. They raised Eurozone growth forecast to 2.2% in 2018 versus 1.9% previously. And the US, they raised 2.7% in 2018 versus 2.3% previously. US 10-year yields have surged 24 basis points so far in January, on course for its biggest monthly rise since November 2016. This is what I've been talking about when I put that song from Hotel California. Mirrors on the ceiling, pink champagne on ice. We are all just prisoners here of our own device. British pound briefly touched 140 for the first time since the post-Brexit vote. We're now trading at 139.65. The pound has risen about 15.5% over 12 months. You will recall it dropped below 120 in the immediate aftermath of the vote, and I believe got as low as 112, though Reuters gave a different number, but I follow the markets very closely, and on a couple of exchanges we got as low, I think, as 112. Pound, as I said, is up 15.5% over a 12-month period. Home thoughts. I've returned. I read Robert Ruark's Uhuru. Very interesting book. You don't find it here anymore. I found it in the Muthaiga Library, and I also just finished Something of Value, which is an outstanding book as well. In that, he says, when we take away from a man his traditional way of life, his customs, his religion, we had better make certain to replace it with something of value. And I've been reading some more Paul Bowles. The only thing that makes life worth living is the possibility of experiencing now and then a perfect moment. And perhaps even more than that, it's having the ability to recall such moments in their totality, to contemplate them like jewels. Jack Kerouac quote, he and I suddenly saw the whole country like an oyster for us to open, and the pearl was there, the pearl was there. I've been listening to Daft Punk, Lose Yourself to Dance. And then came across a very interesting article in the Financial Times about Paul Thomas Anderson has been responsible for arguably the best roles ever played by Tom Cruise, Julianne Moore, Joaquin Phoenix, Adam Sandler, Philip Seymour Hoffman, and Daniel Day-Lewis. Anderson, who first came to prominence in the 1990s as part of an explosive new wave of indie filmmaking, is known for being rather more reserved in person than his contemporaries. A private figure in the shadow of the more cartoonish personas of Quentin Tarantino and Spike Lee. But the slim 47-year-old who settles onto the plush velvet banquet opposite, scruffy black t-shirt, pelt of short tousled grey hair, is not reserved at all. In fact, he achieves a state of relaxation over the course of our conversation, that he peppers it with all manners of expletives and inches his way down his seat incrementally to a position more appropriate for a sun lounger. He is, I consider him, probably the best film director today. Political reflections. This was the cue to get to the stadium for Liberia's inauguration of George Weah yesterday. It's an interesting development, isn't it? Erdogan says we will stay as long as we need. We have no interest in staying there. We know when we will leave. We as Turkey have no intention to occupy anywhere. We have a single goal: to win hearts. The thought of Erdogan winning hearts is a thought all of its own. Summary of the 2018 National Defense Strategy of the United States of America. Interesting document. Take a look if you get a chance. I'll just give you some bite-sized quotes. Today we're emerging from a period of strategic atrophy, aware that our competitive military advantage has been eroding. We are facing increased global disorder, characterized by decline in the long-standing rules-based international order, creating a security environment more complex and volatile than any we have experienced in recent memory. Interstate strategic competition, not terrorism, is now the primary concern in US national security. Hard-hitting where it comes to China and Russia. China is a strategic competitor, using predatory economics to intimidate its neighbors while militarizing features in the South China Sea. Russia has violated the borders of nearby nations and pursues veto power over the economic, diplomatic, and security decisions of its neighbors. Talking about North Korea as well, China is leveraging military modernization, influence operations, and predatory economics to coerce its neighboring countries to reorder the Indo-Pacific region to their advantage. We face an ever more lethal and disruptive battlefield, combined across domains, and conducted at increasing speed and reach, from close combat throughout overseas theaters and reaching to our homeland. Some competitors and adversaries seek to optimize their targeting of our battle networks and operational concepts, while also using other areas of competition short of open warfare to achieve their ends, e.g. information warfare, ambiguous or denied proxy operations, and subversion. These trends, if unaddressed, will challenge our ability to deter aggression. The security environment is also affected by rapid technological advancements and the changing character of war. Long-term strategic competitions with China and Russia are the principal priorities for the department and require both increased and sustained investment. They conclude, be strategically predictable but operationally unpredictable. I wrote a piece in August last year when I called it China Rising, and I said apart from a few half-hearted and timid FONOPs, freedom of navigation operations, China, I said, has established control over the South China Sea. It has created artificial islands, militarized those artificial islands across the South China Sea. It is a mind-boggling geopolitical advance any which way you care to cut it. I said Washington has metasized into an epicenter of risk. Donald Trump refers, and talks of a unipolar US-dominated world have largely evaporated. President Putin refused to be rolled over by a Victoria Nuland-inspired color revolution in the Ukraine and drew a line in the sand. And one of the collateral consequences of that was to send Putin into the ready embrace of Xi Jinping. In fact, far from being a unipolar world, we have entered a bipolar or even tripolar world. Then I was talking about Pakistan, where China has leased the Gwadar port, giving China and Central Asia access to the Gulf region and the Middle East for 43 years. Sri Lanka, which gorged on Chinese debt, has had to disgorge the Hambantota port to its creditor. And recently we saw China formally open a military facility in Djibouti. These moves taken together speak to a material Chinese advance. The pivot to Asia, which was supposed to contain China, is dead in the water, and China has sprung that trap. I was also saying China is also Narendra Modi's face in the Doklam Plateau. And I said Xi Jinping is goading Narendra Modi, who's got him entirely surrounded. So I think, that was the document is in response to these facts. It's not clear to me that the US has that military lead, which its hegemony rested upon. Ivanka Trump is leading the search to replace John Kelly, reports Vanity Fair. Trump's relationship with John Kelly as chief of staff, thought from the beginning, may finally have gone past the point of no return. Ivanka is the most worried about it. She's trying to figure out who replaces Kelly. Departure isn't imminent. He wants to stay longer than Reince Priebus. Trump cannot afford another high-level staff departure. Indeed, he can't. He said, apparently, I've got another nut job here who thinks he's running things. And then the Daily Show tweeted, shutdown's over, back to work, Mr. President. And look at the photograph that they posted. And then they said, whoops, wrong pic, and posted this photograph. Women, according to Trump, were simply more loyal and trustworthy than men, Mr. Wolf wrote in his book, which I've got but haven't read. And my piece over the weekend was about my visit to the United Kingdom, where I met with Mr. Collymore. I was talking about Theresa May's longevity, about Macron, about the European project, about the demise of the high street, about millennials with their avocado eating and cryptocurrency ways. And then I was talking about the likelihood of a $2 billion Eurobond here in Kenya. On that note, let me post a photograph of Putney High Street, which I knew extremely well because I lived in Putney for many, many years. Let's move on to the currency markets. Euro dollar 122.51, dollar index 90.37, Japanese yen just at 111. Swiss franc 0.9621, the pound 139.66, the Australian dollar 0.7971, South Korean won 1070.71, the Real 320.20, Egyptian pound 17.7155, South African rand, last I checked, 1207.42, about which I'm extremely bullish, notwithstanding the IMF. Dollar index, last I checked, 90.37, but I'm expecting a little bit of a rebound now. Euro dollar, 122.52, Draghi speaking on Thursday, we could drag up to 123.50, which has capped it previously. General technical analysis rule, violation of a parabolic advance leads to an 80% plus decline in value. If general rule is followed, Bitcoin should retrace to less than $4,000. This is Peter L. Brandt. He's talking about a parabolic advance, and that took me back to Thomas Pynchon. It is a curve each of them feels unmistakably. It is the parabola. They must have guessed, once or twice guessed, and refused to believe that everything always collectively had been moving toward that purified shape latent in the sky, that shape of no surprise, no second chance, no return. Actually, as I said on the 2nd of January, I'm no longer bullish for Bitcoin. 8th of January, I wrote about the crypto avocado millennial economy. 27th of November, last year, I spoke about Bitcoin, what a ride. General Electric is down 45% over 12 months. That's pretty extraordinary. Netflix, another stock I'm bullish about. This article in Gadfly says growth is in the eye of the beholder, but let me say this. It added 8.3 million more subscribers than it lost for its streaming service, and I think they've done remarkably well. I, for one, want to bet on Netflix, but not today because it surged yesterday in after-hours trading. Crude oil, Brent crude last trading at $69, the figure. My target was 70, we hit that, but I am of the view we're still going higher. Gold, 1337 trading. Russia and China have bought bucket loads, it appears. For the year, frontier markets are up 6.3%, emerging markets 6%, developed markets 4.4%, putting frontier on track to beat last year's January sprint of plus 6.6% and possibly record the best start to the year since frontier market index records began in 2003. Let's move on to Africa. Ethiopian police officials in Amara region in the north confirmed Sunday evening that 7 people were killed when worshippers celebrating the Epiphany holiday clashed with security forces. The killings on Saturday in the town of Waldia, some 500 kilometers north of the capital Addis Ababa, happened on the second day of the colorful Epiphany celebrations in Ethiopia. I've spoken about this frequently in October 2016 when they imposed the state of emergency. I said that the government need to change tack and effect a course correction, and history shows us that this course correction is one of the most difficult things to pull off. Mnangagwa's New Zimbabwe merits support, says the FT. And that's indeed high praise. Deeply compromised as he is by years as one of Mr. Mugabe's chief lieutenants, he deserves a hearing, but also a clear message that he will be judged by his actions. Mr. Mnangagwa's very appearance at Davos is a sign of change. It's a fact. Saying this year's election will be a crucial test. Mnangagwa's promise of democracy will be strengthened and respected. He told the FT election monitors from the EU, the UN and the Commonwealth would be welcome. He should be held to his word. He must allow the formation of an independent election commission and wipe the electoral lists of dead voters. Saying that Mnangagwa is calculating that if the election is fair, he will be swept to victory on a tide of optimism amid opposition disarray. The distinct possibility makes it all the more important for the West to prod Zimbabwe in the right direction. Daily Mail, however, says ruthless new leader of Zimbabwe being welcomed by global elite in Davos despite links to decades of repression and genocide alongside predecessor Robert Mugabe. Very soon the UN and the international community will have to decide whether it can support an electoral process in which all peaceful demonstrations are banned. This is the DRC Congo. That's Jason Stans. WTB Klaus, who writes for Bloomberg, says beautifully put, it's a tricky choice, but there needs to be a reckoning because it doesn't look like the guys in charge can be persuaded, forced to play nice or by the rules, even the teeniest bit. VTB, the Russian bank, says it's in talks to prolong Angola's $1.5 billion loan to 10 years. Angola's central bank may begin the process of fully floating its Kwanza currency in 3 months' time, bank's governor Jose Massano said. The bank will evaluate the new regime after 3 months, and the central bank governor, this path should lead to the adoption of a fully floating exchange rate, the newspaper said. It did not quote him directly. Since the peg was abandoned, the Kwanza has lost over 20% of its value to the dollar. It is as if Cyril is confirming that he has taken over the reins, said Susan Buisen, a political science professor at the University of Witwatersrand. I would say Zuma will be gone in anything between 10 and 30 days maximum. I wrote on the 18th of December, will it be 1994 all over again? We can all remember the moment when Nelson Mandela came out of prison, blinking in the sunlight and assumed leadership. Ramaphosa could well be the ignition for returning South Africa back to that incredible moment, full of promise. Global investors, I said, will surely buy the rand by the bucket load, and we could see a further meaningful rally in the order of 10% towards 12. I'm now looking for 11. Dollar rand, this is a chart from Karen Richards. My target is 11. South African all share up 2.61% year to date. South African stocks are more popular than ever before. This is via Bloomberg. Nigerian central bank unable to meet holds rate at 14%. The African Development Bank is to increase Nigerian loans by $2 billion. Nigeria's diaspora remitted $22 billion to Nigeria in 2017. That is almost Kenya's entire budget for 2018. Nigerian all share up 17.44% year to date, best performing stock index in the world bar none. Bank of Ghana held its key interest rate as inflation persists. The Ghana Stock Exchange is up 11.9% year to date. Kenyan setbacks failed to dent investor optimism. This is John Aglionby in the FT. De La Rue, the world's largest commercial currency printer, is the latest company to find that operating in Kenya is far from straightforward. The company lost a contract to print Kenya's banknotes, sees East Africa's dominant economy as worth the effort. Robin McKenzie, who I had lunch with, said including the failure to finalize a joint venture with the government announced 17 months ago as a barometer for investment. Of course, you get bumps along the way, ups and down, he said, adding that De La Rue is committed to its banknote and security printing facility in Kenya. It's only one in Africa. We've appealed the contract decision because we feel aggrieved by it, but we're committed to the country because of that sense of optimism, that sense of growth, excitement and positivity about the future. Many investors last year suffered from two other bumps: the political crisis after the Supreme Court nullified the result of the August presidential election, the first such ruling in Africa, and the slowdown in the growth of loans to the private sector after interest rates were capped in September 2016. Nikhil Hira, who's a friend at Deloitte, people were not paying their bills. We've never known it so bad, and it's not just a Deloitte issue, it's widespread, he said. Like many executives, Mr. Manjang is bullish about the next few years. Executives say Kenya's diversity and openness make it one of the most attractive destinations on the continent, even if generating consistently strong returns can be a challenge. Bechtel, Hilton, Volkswagen, EABL, which is majority owned by Diageo, Abraj Group, are among the companies that have made significant investments in Kenya in the past year. Clients who had adopted a wait-and-see attitude are coming through, Mr. Manjang says. Investment plans are starting to be executed. He predicts that economic growth, which is expected to fall to about 4.5% in 2017 from 5.8% in 2016, will rebound to well over 5% in 2018. In the World Bank's latest Ease of Doing Business Index, Kenya rose 12 places to 80, making it the third-ranked nation in sub-Saharan Africa. According to EY, Kenya is the second most attractive investment destination in Africa after Morocco. And Karima Muchoki, chair of the Kenyan Investment Authority, says the economy is ready for takeoff. The president has identified his 4 pillars and is moving fast towards them. Kenya is also benefiting from economic and political uncertainty in other prominent African economies, analysts say. We're the ripest apple in the basket right now, Mr. Hira says. Ms. Karima Muchoki fears the good times will last only until the next election cycle, however. 14th of August, I wrote a piece called Finding the Off-Ramp But Still Relevant. Kenya Central Bank held its main lending rate at 10%. The Treasury cut 2017 GDP growth estimate to 4.8% from 5.1% due to the elections and drought, and forecast GDP this year at 5.3%. I said in my article over the weekend, sure, a $2 billion Eurobond will kick the can down the road. The Eurobond markets remain very benign for sub-Saharan African sovereign issuers. To wit, the Kenya's 24 issue is yielding 5.65%. And therefore, I think the government should be looking at issuing in that part of the curve. I wrote a piece called, I said in my article over the weekend, I was speaking about the millennials with their avocado eating and cryptocurrency trading ways. And I said they're just as likely to be African as they are to be European or American. And we learned yesterday that avocado, which is one of the world's trendiest varieties of fruit, is not allowed to leave Kenya because of the price surge. Base Resources is to expand mining in East Africa. According to the East African, Base Resources plans to increase its exploration mining activities in the region after winning 5 licenses from the Tanzanian government to search for mineral sands. They're also producing mineral sands in Kwale, has applied for a license for more acreage from Nairobi and is set to complete a $75 million acquisition of Toliara sand mines in Madagascar. The acquisition of the initial 85% interest in the wholly owned Mauritian subsidiaries of World Tintain Holdings Limited, which between them hold 100% interest in the Toliara Sands project in Madagascar, is scheduled to complete in the week beginning 22nd January. In Tanzania, it has secured exploration tenure over 475 square kilometers. Base Resources is applying for an additional prospecting license covering an area of 136 square kilometers here in Kenya. Posted a profit of $21 million last year, up from a loss of $20 million the previous year, but reduced its debt load from $204 million to $128 million in June, and it took further to $65.6 million in December, giving it headroom to make new investments. I, of course, am on the board of Base, and I'm very proud of them. They're really, they've been nimble, they've had a tough environment, they've survived it, and I think Tim Carstens is somebody I would bet the house on, frankly. Nairobi all share up 5.03% year to date. The upcoming infrastructure bond will certainly be fully subscribed, in my opinion. The NSE 20 is up 0.8% year to date. National Bank issued an official statement on the attempted fraud. It's rather alarming. Majid Al-Futtaim says Carrefour Kenya recorded sales of 1.54 billion shillings between May and December. Once again, thank you for stopping by, and hope to see you at Mainspeak.